I'm now joined at the desk here by Peter McGuire from XM. Peter, thank you so much for joining us. Let's start with the Australian dollar then. I mean, it did actually fall below 68 cents briefly this morning, which is about a 3-cent fall over a period of
24, probably 36 hours out of them. I mean, it's just remarkable.
So, and yet, of course, on the other hand, we're seeing the market up by 1.2%. So do you think the currency market has for some reason taken on board the news from China more than the equity market has?
Well, I think so. I think it was obviously that, that number coming under 50 as far as that PMI being released in China yesterday, and that what impact that has naturally to the Aussie dollar. There is no doubt when traders see an opportunity and when markets fall, the retail FX market and, of course, the commercial market trades about $6 trillion a day. Now, the Aussie is one of the most heavily traded currencies in that basket, and when bad news mounts to one side, we always either get a big ratchet up or we get hit pretty hard, and that's what's happened this time.
Yeah, so when the currency falls so much, I guess that makes our shares cheaper, our property cheaper.
Absolutely.
In US dollar terms. So
yes.
do we get more foreign buyers then when that happens?
Well, you get more foreign buyers, you get more people that'll trade a currency, and they'll see opportunities if they're looking at shares, or they're looking at property, or they're looking at whatever. But it's a short-term movement like that demonstrates to the market the volatility that we see as far as our dollar. And when you see a 3-cent fall in that short period, it's quite remarkable. I mean, that's nearly a washout when you think about the magnitude of it, 300 basis points.
Yeah, so what sort of other implications does such a large fall have? Of course, economists will say that it's going to boost our exports to other countries. They get excited about it, but I think your average man in the street probably doesn't like a falling dollar. He feels as though he's poorer in some way.
Well, if he's travelling overseas, it's not a plus. It's certainly a minus, and when you see that sort of hit, the buying power, people going to the States, what you get for $5,000 versus what you got for that $5,000 worth of buying power 18 months ago or 2 years ago was significantly more.
Now, just turning to the States now, which you just mentioned, that crucial jobs figures out this Friday, US time. What are you expecting to see there?
Well, look, there is no doubt that as the momentum's building, I think that they were shooting for a 178 sort of number. Whether it's going to hit that number is a little bit unknown, but that's the market for you. But I'm pretty sure that that it's been a solid push over the last matter of months, and it hasn't. We haven't seen any tail off as far as those job numbers. So I think that the momentum will probably hit that number. I'm not really thinking that we're not going to, considering that you've been through that Christmas period and a good employment season in the US.
Well, just on the jobs market generally, and not just the US, of course, it's been a great story there. 3.7% unemployment rate in the UK, it's about 4%. Here it's been falling as well. Do you see that is the main bright spot in the global economy, the labour market? But there seems to be more doom and gloom in whether it's PMIs, certainly share prices falling. How do you see the balance?
There is no doubt that it's a solid number and it's a good number, but we have to see also wage growth, and that's starting to trickle through now. But there were many years there that everyone complained, men in the street, women in the street, that there was no wage growth. So now you're seeing that starting to pick up. You're seeing companies, and if you look at the States, for example, they've had wonderful growth, big balance sheets, and of course what they've done as far as share buybacks and dividends. So naturally we'll see some of those dollars go back into as far as keeping employees more satisfied. And when the labour market is tight, naturally that has its own issues because there's a war for talent.
Now, we certainly talk a lot about the Australian dollar exchange rate with the US dollar, but what about with some of the other crosses? What are the salient points that stick out
Euro.
for you? Yeah, what's been happening recently?
Well, I look at the euro and I think they've got their own issues at hand. Is the euro going to survive long term? When you think of if the Brexit issues, what's happening as far as Italy, where does that see itself as far as debt levels, Greece? All of those factors have not gone away, and we just have to work through the first part. So it'll be interesting to see what happens longer term over the first 30 to say 120 days for the euro, and look at the same for the Japanese market. I mean, when you're thinking, we've seen a washout, Adam, of $13 trillion of asset or value coming from global stock markets. $3 trillion came from China itself. So what impact that's going to have naturally affects the domestic economies of those particular nations.
Yeah, just on the euro currency, and of course yesterday was the 20th anniversary actually
today it sure was.
Of its establishment.
Wonder if it makes 25.
Well, that's what I was going to ask you. I mean, what do you think is kind of the longer term prognosis for that currency? I mean, do you see it eventually shrinking to a smaller group of core currencies? Maybe France and Germany and a few others?
Yeah, I wouldn't be surprised. And I think that, naturally the debt levels of what they've got to pay back in the sense of that sovereign debt that Greece has, you look at Italy, you look at a lot of the Spanish issues, Portugal. There was only a matter of years ago and it was always called the pigs. And we're going to get, I think it's only going to be a return of that. I've listened to many analysts and, I remember Jim Rogers saying many years ago, he'd be lucky to make it to 2020. That's the euro itself. So I think it'll get there, but the first, crack in the armour is going to be certainly Brexit and what impact that has, and we're going to see a contagion moving forward.
Well, just on Brexit, what are you expecting to see there? Of course, we've got the vote in the House of Commons, I think, within 2 weeks, where the so-called deal
I think it's the 14th or so.
Yes, that's right. So let's assume that it gets voted down. Where does that leave the UK and the EU?
Well, are we going to see another referendum? And then if you do see a referendum, as we've discussed many times, you're going to see it, say the other side get up, and it'll be interesting to see, because the people in London want to remain in, naturally, the Eurozone, and the people outside of London and the older people want to be removed from it. So is it going to be one for one, and then they're going to say, well, we better throw a coin up in the air again, and we'll see whether we have it, best out of three. I think it's going to be a quagmire. Any way you look at it, it's going to be, I don't think anyone's going to be happy overall. The English in London, and naturally the elder outside of the capital.
And surely a second referendum would have enormous implications for market volatility if it were announced, but suddenly everyone would be so focused on what this was going to...
It's going to drive the pound down. If it gets through, I think the pound is going to rally very strongly to the upside. But that's the issue, is Theresa May, does she have the support? Funny things happen also in politics. When you observe them, you think you haven't got the numbers, then all of a sudden they steamroll them through. So I'm sure that there's a lot of deal flow going right now over since Christmas, all the way leading back to when Parliament come back at, I think, the 14th of January. So we're only a bit over a week away.
Yeah, just on the British pound, it certainly has fallen a great deal since the vote in 2016. I think it's largely flatlined since.
Yes, sir.
Is that fall basically the effects of Brexit already priced in?
I think it is, definitely. As far as the economy's going, it's performing quite well over there for what the UK economy is. Inflation's under control there. Interest rates, they haven't had massive property meltdowns or anything like that. They're recovering in that phase. Economically they're doing okay. But yes, a lot of that has been priced into the value of the pound.
Now, just finally back on the Australian economy now, we saw on the front page of the Australian today the Treasurer out there saying to banks, please lend, please open your accounts. What do you make of that? I mean, is that strange policy to be telling the banks to lend when they're meant to be private firms?
I think the Reserve Bank is very much aware of what the situation is as far as property. They've got a hemorrhage stock market, considering where we are today and where we were, at 6,200. So the value in the sense of perception of what people see as their true net worth. And when you see those large markets, Melbourne and Sydney, down 13, 15% or whatever that number is, depending upon the area, because they're vast cities, then that greatly impacts people's, again, perception. And that's why the banks would be saying, the government would be saying, let's get some, borrow and spend and try and create some purchasing.
Even more debt.
More debt, and that's the issue. I mean, when you think about it, that we're under so much debt. It's a different cycle this time versus 2008. I heard a number the other day. I think we're up 500% as far as global debt in that last decade. So when it does unwind, it's going to be a very, very harrowing story.
Okay, Peter, thanks so much for joining me.
Thank you, Adam.
That was Peter McGuire there from XM.